Good morning, everybody. Welcome, welcome, welcome. This is our November webinar for CARICAD, and we are looking at the very important topic of innovative climate financing. And what is the role of the public sector in accessing and capitalizing on innovative climate financing options? I am Lloyd Parks. I am the Leadership Development and Institutional Strengthening Specialist with the Caribbean Center for Development Administration. Welcome. We are so happy to have you. And as I said before we started officially recording, people can still register and join us for this webinar. So if you have colleagues and you know that this is a topic that is of interest to them, but clearly it is a topic that is of importance to all of us in this region, and indeed a topic of interest to us on a global scale. So you want to invite others, they can still register and join us. And so I see from the names that are in the room, I think many of you would have done webinars with us before. I see a lot of names of our alumni, people who have done our leadership programs or introduction to leadership or transformational leadership program, people who did the program under the Caribbean Leadership Project umbrella, people who did the Leading Change, current participants. I see the current people, Cherry and Keon, and yes. It's so good to have you. And so, but there are a few persons who, maybe it's your first time and we want to have a good learning experience in this webinar, right? And we do these webinars regularly as a part of our continuous improvement process as co-inhabitants of this space that we call the Caribbean, right? And beyond, right? And as we do this journey of leadership development together. And so we want to minimize our distractions by, closing other software applications apart from Zoom, mute your phones, even myself. I am just realizing I did not mute my phone. So I need to do that pronto. Let me get that done. Yes, indeed. And your colleagues, we love them. We work with them. We have to collaborate with them. But they too can be a source of distraction when we're doing learning in the virtual space. And so you want to just tell them, just another hour. And you will have me all to yourself. But just allow you to just zone in and learn all you can. And of course, bandwidth can be a challenge for many of us. So we want to plug in that internet cable if you have it. There is an opportunity in our webinars when we come to the discussion period if you want to raise your hand and to ask your questions, but you don't absolutely have to. And so, I see many of you already know the chat feature. Hi, Emily, I see your good morning in the chat. So, you are free to use the chat to make your comments and to pose your questions. So we always want to know where people are joining us from today. And so I know from the chat, I would have seen that Robertine is joining from Antigua. I myself am joining from Jamaica. Where are you joining us from today? Could you put that in the chat for us? Says Mikhail from Jamaica, Alimfe from St. Lucia, Sophie from Barbuda, Sharma from Jamaica, Andrea from Jamaica, Janine Antigua, Erica Jamaica, Jackie Trinidad, Vernanda from Dominica, and may I wish Dominica and Antigua belated Happy Independence Day. Yeah. Patricia from St. Lucia, Charles from Barbados, Claudia from Antigua, Wendy from Trinidad and Tobago, Davon, hi Davon, from Carriacou, Grenada. Grenada is not just Grenada, it's Grenada, Carriacou, and Petit Martinique. Yes, indeed. Amanda from Antigua, welcome. Yes, it's a regional affair up in here. COPs is going on. I think it's is it Egypt? But we're having our own climate impact conference right here in the Caribbean. All right. Janelle also joining from Carriacou. Yes, Cherry from Barbados. Joycelyn from Dominica. Emily from Trinidad. Yes, Gail from Antigua. Ivana from Trinidad. Yes, yes, yes. It's so good to have you all. And so here is our warm-up question. But it's really to get us started on this discussion, because I know for sure nobody put a gun to your head. You were not forced to attend this webinar. And so we are curious, myself, along with our presenters, who I shall introduce soon. What are you most interested in learning about this topic of innovative climate financing and the role of the public sector? You can use the chat. You can also raise your hand and we can unmute you. But what are you curious about in relation to this topic? And I give you a little moment to think about that and to type in the chat. What are you most curious about? Okay. So Emily is first out of the block, and Emily said the state of understanding in the public sector. Oh, and she said it's an area of her research. Okay, Emily. So Emily, especially during the discussion period, you can certainly tell us a bit about your research and, and how that applies and what we can learn from what you are gaining from your own research. Erica is interested in business continuity and risk management aspects. No, you're quite right, Erica. Just yesterday when we were having our preparation meeting, dry run for this, that's one of the things we were discussing, that when we're talking about climate financing and dealing with climate impacts, it's not just the people in the Ministry of Environment or the people or meteorological offices or our people who deal with disaster management and disaster responses. Yeah, it's really all our business. And do we understand that we have a role to play? And part of that role of the public sector is, how do we design and deliver public services in such a way that allows for business on continuity and for us to manage adequately the risks that we face from climate impacts. Janelle is interested in learning about available funds that may be used to assist her agency in executing its function. Yeah. And indeed, there are quite a bit of sources of funding around that are available, but we do need to know where it is, what it is, and how exactly do we capitalize on these avenues. Ria, how can we better accomplish our goals and improve efficiency without breaking the bank? I like that, Ria. All right. Now, Erica said her overall interest is in ICT and ESG. Now, you have to forgive me, Erica, you have to go tell us what ESG stands for. I think most people know what ICT is, but ESG. Faye, hi Faye. Faye is another of our alumni hailing from Barbados. She's interested in what are other sources of funding besides CRIF SPC? Right, CRIF is one of our partners here at CARICAD that we're quite aware of work that they do. So ESG, Nadia jumped to environmental and social governance. Got it. So Charles. So Charles says innovative, because we have the word innovative in our webinar title. Innovative suggests new and or improved. It is certainly required given our lack of access to financial, I'm not quite getting this word here, but access to finance to address the challenges to address climate impacts and climate changes. No, you're right. Many of our countries, because of the faulty, may I say, way in which our economies are classified, we are sometimes denied access to certain kinds of financing to deal with these things, and yet we are so vulnerable, right? So Faye is sharing something very interesting that's happening in the government of Barbados that I think would be of interest to all of us. From the next financial year, Barbados will be tracking climate mitigation and climate adaptation expenditure. Yes, and I certainly believe that is something that all our countries in the Caribbean should be doing. And so I'd be curious to hear from others, is that something that's happening in your country? Are you tracking climate mitigation and climate adaptation expenditure? Is that something that is under discussion? Let us know in the chat, all right? And Faye, we would love to follow up with you guys just to see, once implementation has happened, how is it going? How easy it is to track that data. How do you actually do it? How do you use that information? All right. And I just want to say welcome to those who are joining us. I saw Esther joined us not too long ago. Esther, another of our alumni from Trinidad. And I see my dear friend, Carol Houlihan. Hello, Carol. Carol hails from Canada, but she's Caribbean in her heart. We have worked with Carol. She was our gender diversity specialist when we were with the Caribbean Leadership Project. So, and she's always very much interested, not just in gender diversity, but also in this area of climate financing and how climate change affects economic development. She's also an economic development expert as well. So Carol, so good to have you here. So good to have you here. And so for those who are just joining, and I see some good mornings in the chat here. Hello, Shama, from the Ministry of Transport and Mining in Jamaica. And so Shama is interested in sources of funding and the relationship to transport planning. No, that's a really good area of interest there, Shama. Not just because that's your area of work, but one of the things that we want, I want all of us to understand is that this is something that affects each and every one of us, irrespective of what part of the economy which we work or what part of the public service that we work. This is our business. It affects us in one way or the other. And each and every one of us, we each have a role to play in this process. All right. So, like I said before, this is our topic, innovative climate financing and the role of the public sector. And for those of you who might be new in terms of hearing about the Caribbean Center for Development Administration and what we are about, we are an arm of CARICOM, and our role is to support our member states in the area of public sector reform and transformation. And we do so through a number of capacity building initiatives, including leadership development, including support in the area of strategic planning, organizational development, among others, HR development and HR management. And we also provide technical assistance in those areas to undertake specific projects upon request from our member states and clients within those member states. And our work is really driven by our Charter for the Public Service, Charter for Caribbean Public Services. And what you see here is just a synopsis of the 6 main pillars of the Charter. And you will see that when you look on what we call our Charter roof, that resilience and sustainability is definitely something that we aim through our work to support for our member states. And hence our keen interest in all things environment and in looking at climate change and not only what we can do to prevent, to mitigate, to plan for, and to indeed for our region to become climate resilient. And so today we have the pleasure of welcoming 2 of our friends. I just met Rafael yesterday, but we have adopted him. So yesterday he's friend, no, by the time he's done, he's family. So Nadia Spencer-Henry is one of our alumni from our leadership development programs, C5 Game Changer. Nadia Spencer-Henry, she is currently the debt manager with the Ministry of Finance and Corporate Governance with the government of Antigua and Barbuda. My girl is very experienced, let me tell you, over 20 years in the area of fiscal and debt management. She has worked with the Eastern Caribbean Central Bank. She has worked also with the Financial Services Regulatory Commission. She is currently a doctoral candidate at the University of the West Indies Cable campus. And her research interest is really this area of climate finance. Also presenting along with Nadia is Rafael Molina. And Rafael is managing partner with Newstate Partners, LLP. He has extensive experience as well in the area of dealing with sovereign clients, advising them on comprehensive liability management strategies aimed at optimizing debt service profiles. All right. And even while I'm introducing them, I will encourage Rafael, you can start sharing your screen. Now, Rafael has worked closely with a range of governments around the world, providing assistance in addressing public sector debt challenges. And you know, people, we have public sector debt challenges in our region. So we are all ears to hear all that Rafael has to share with us, right? He has his MBA from Columbia University. And let me tell you something, this man has worked any and everywhere, including Iceland, Ecuador, Liberia, Peru, Zimbabwe. This is a man for all seasons, a global citizen, but we're adopting him into our Caribbean family. So welcome, welcome, welcome to my brother and my sister, Rafael and Nadia. Over to you guys.
Yeah, thank you so much, Lloyd, for that warm welcome. Only like how an LDP person can do it. To all of those joining who have been with us in the Caribbean Leadership Program, are doing the programs on the CARICAD, we are happy to have you. This is another step in your leadership journey, another tool for your toolbox. Whatever you're calling it, this is going to help you a great deal as you progress. I'm going to ask Rafael to share our screen now because we have a lot to get to and it's going to be a really short time. In short, this morning, we want to talk to you about innovative climate financing. And it's something you may not hear about every day on your job, depending on what industry you work in, but this is our bread and butter, Rafael and I. We talk finance every day, and climate financing for us is pretty much a part of what we do. Now, why climate financing? Climate financing is very important because it's gaining a lot of attention on the worldwide scale. And so today we want to share with you the government of Antigua and Barbuda's program looking at a specific area of climate financing. I'm just going to broad brush the others, but specifically, we're going to be talking about today debt for climate swaps and liability management. It may be dense for some of you, but we will try to go slowly and keep the acronyms as simple as we can. Now, just a bit about the background to innovative climate financing. I'll be sharing that. I'll also be sharing with you Antigua and Barbuda's experience. And then I'll turn over to Rafael, who will talk to you about debt for climate swaps, implementation considerations, and some conclusions. And finally, of course, we'll entertain your questions. So now just a little bit about a background. Small island states, which most Caribbean states fall into, we are facing a lot of climate issues and particularly vulnerabilities related to the climate. Most of you would see that we have been going through periods of drought or periods of extensive rainfall where we have flooding, we're experiencing earthquakes, we have biodiversity issues, we have invasive species issues, and all of this requires financing in order for us to be able to adapt and to mitigate against climate change. Fiscal capacity is important. And by fiscal capacity, I mean having space in your budget to be able to support this. Many of us, our budgets are very tight. I'm sure you go to your Ministry of Finance requesting additional financing and you hear the budget is tight. You have to keep your numbers tight. You can't increase your numbers. You can't hire new staff. And this is because not only are the challenges great, but the finances are also limited. And coupled with that, Caribbean nations also have heavy debt burdens. So because of that, we have to find a way to constrain those debt service payments so that we have room to be able to finance other areas. Right now, just as Loy spoke about in her introduction, the United Nations Convention of the Parties is being held. The 27th year of it is being held in Egypt. And at this time, they're discussing varied measures, one of chief of which will be a loss and damage facility for the Caribbean nations. And that is just one financing mechanism. You've probably been hearing about green and blue securities. And you've possibly also been hearing about sustainability bonds, index-linked bonds, and you're trying to figure out what does all of this have to do with the climate. So when we talk about climate finance, we're talking about dealing with vulnerabilities. And that's what small islands are. We're vulnerable. We're vulnerable to these shocks because when a hurricane hits, it dampens your economic activity significantly, and it reduces your ability to really combat climate-related issues. And far worse, it leads to debt sustainability issues because very often we don't have the revenue source. And so we have to borrow in order to be able to build back roads, build back schools, fix hospitals, fix utilities. CRIF is only so much, so we have to find the money elsewhere. These gaps that we have to test the appetite for creditors to see how they would be willing to reduce our debt service so that we have additional fiscal capacity to be able to finance climate-related challenges. So this morning, in Antigua's experience, I want to share with you what Antigua and Barbuda has been doing, because I think we learn best through what our neighbors are doing. Antigua and Barbuda has looked at the national and global trends. And one of the first things we did was to do what's called an assessment of climate finance. We looked at how the government had been spending on climate financing for over a 10-year period. And we realized just about 3% of our capital expenditure was going towards building climate resilience. And so we felt that we had to do a more proactive step in terms of helping us to be able to combat climate finance. So we went about doing what we call a medium-term fiscal strategy and a medium-term debt strategy that allowed us to be able to really prioritize some of these expenditures such that when something like a calamity of some kind hits, that we have created what we call a fiscal buffer to be able to finance. So you've seen two acronyms here, MTFS, medium-term fiscal strategy, medium-term MTDS, medium-term debt strategy. As we've been doing that, several options appeared to us. One, for engaging our creditors, and another for really putting together projects which would allow us to mitigate the growing climate risk that we have, as well as normalizing our debt arrears and leading to fostering debt sustainability. Now, we will go on and we will focus more on what we call debt for climate swaps, looking at some of the stakeholders, some of the national institutional frameworks, and of course, communications, having a robust communication strategy to deal with this. So as we move on to talk about what Antigua and Barbuda has done, we look at the legislative framework. Those of us working in government knows that everything happens within the sphere of a legislative framework. In Antigua and Barbuda, this legislative framework was set up to help us to do what we call debt conversion. So in doing this debt conversion, it allows Antigua to be able to work along with regional organizations as well as international organizations to be able to put together its Debt for Climate program. The legislation that we put in place is called the Environmental Protection and Management Act, and it was just done just recently in 2019. It was passed. Now, this Environmental Protection and Management Act allows for what we call an institutionalization of climate finance mobilization. So what it allows the government to do was first to change our chart of accounts. You would have heard Faye talk about monitoring and capturing climate mitigation and adaptation expenditure earlier. We also try to capture climate adaptation and mitigation revenue as well. So where we are earning money from areas of reducing our expenditure, where we're earning money, we capture that, as well as where we are spending money. So this allows us to capture grants that we would have gotten or any type of technical assistance that we would have gotten to help us with climate adaptation and mitigation. Also, with this act, we have put in place a medium-term development strategy that
Nadia,
also...
if I could interrupt, I think this is a really important point that you should stress, which is we're looking at basically creating something that is comprehensive in nature, that can capture all the resources that are coming into Antigua to create fiscal space. So it's not just basically debt for conversion, debt for climate swap. We're looking at grants, matching donors, whatever we can find. It's basically a one-stop shop that are able to take out and basically diverge and disperse the money the right way. That's really the key, one of the key aspects of Antigua and Barbuda's policy framework, right? Right, Nadia?
Thank you so much, Rafael, for that. So he's brought out a new word here, and this is divergent sources, which somebody spoke about earlier. So you're not just talking about your revenue streams, you're not just talking about your debt. We're also talking about grant resources. We're talking about blending resources. We're talking about debt for conversion swaps. We're talking about just any type of financing source that there is, creating the fiscal space to do it. With the chart of accounts, annual budget, or medium-term development strategy, which is where we capture some of those projects that I would have spoken to earlier. The blue charter, we also have what's called a blue charter, which looks at our blue economy issues. And we've also captured it in our nationally determined contributions. These are our NDCs, which you probably have heard about. And these are what you report on to the UNFCCC, that is the United Nations Framework Convention for Climate Change. Also in this act, it allows us to have what we call a whole of government approach. You would have heard Lloyd talk about this. So it's not just about what the Department of the Environment is doing. It also looks at a whole environmental policy framework that allows the Department of Environment to work along with not only legal aspects, but identifying as well financial and institutional ways to address an effective environmental protection policy. So we have several stakeholders, and the list is not exhaustive here. Ministry of Works, because they do roads, and it means building roads in a more climate resilient manner. We have the Ministry of Environment, of course, because the Department of Environment is there. We have the Ministry of Finance, which I am a part of. We have the National Office of Disaster Services, And of course, we have the Ministry of Agriculture. Why? Because sustainable agriculture is very important to having good climate resilience. So as we move on, and we've put this act in place, we also have had to put several institutional arrangements in place, because while the public sector is doing its own thing and we're generating our own space so that we can do our part, we also have to allow households to be able to transition as well with climate resilience. So we have put what we call in place the Sustainable Island Resource Framework Fund. Very big name, but we call it SURF. And this fund looks at helping private owners of homes and businesses to be able to do climate resilience activities in their own homes. Now, this fund was set up using grant funding. So this is what we talk about, blending financing and using financing from different sources. This fund uses 3 grant sources. We've gotten grants from the Green Climate Fund, the Global Environment Facility, and also from the Adaptation Fund. And these 3 funds that we've taken those grants and we've put it into a separate fund where we call the Sustainable Island Resource Framework Fund. And that fund then gives small, very cheap loans to private individuals to be able to climate proof their homes. And as in climate proofing their homes, they can put anything from putting in a really resilient cistern, which is good for water catchment, which we know is a good part of climate resilience. We're talking about putting in things like renewable energy, energy efficiency. So we're talking about solar panels, and we're really talking about helping businesses and homes to be climate resilient. And of course, it allows this act as well to really work along with what we have in our Finance Administration Act in terms of its regulations, so that government spending is able to really capture climate resilient spending, and of course, helping us finally to be able to do these debt for climate swaps. So let's move on a little further and we talk about the Antiguan case. We spoke about earlier these nationally determined contributions. Antigua also has its NDCs lined up to be able to create this fiscal space by providing space not just for climate adaptation, but mitigation as well. And it also allows in the NDCs that we would have prioritized the SURF for any type of extra financing that we have, so that we have this finance to be able to dole out to private individuals. Now, there's a critical little thing I want to talk about here, which we haven't fully defined, because I'm assuming everybody knows the difference, but just for definition purposes, the difference between what we call climate adaptation and mitigation. Now, adaptation is about allowing us to adapt to climate change that has already taken place. So for example, you put an air conditioner in your home or in your business, that's an adaptation method because the place has already gotten hot. And so you're now putting in something to make yourself feel cooler. But a mitigation measure, on the other hand, helps you to reduce carbon dioxide from going out into the atmosphere, or increasing what we call greenhouse gases. So by mitigation measures, we're talking about doing things like reducing energy generated from coal production, reducing energy from fossil fuel production. So if, for example, you're driving an energy efficient car, or you're putting solar panels on your home, or you're putting a wind farm, some type of wind generated energy facility on your home, these are called climate mitigation because they help us to reduce greenhouse gases from going into the atmosphere. So climate adaptation and mitigation is what these projects are helping us to do, and these innovative financing mechanisms are helping us to do. And onwards now, we have spoken about our nationally determined contributions. I spoke a bit before about project development. This is very important. Most of you would have heard about the public sector investment program. So the government aligns its public sector investment program so that we can attract financing from different sources. So for example, the SURF fund was set up before we got any financing from the Green Climate Fund or from the Global Environment Facility. And once this was set up in one project, they saw this like the idea, and then they place the funding in. And so that's an important part of climate financing. You have to have something to be financed. It's not just about raising money, but persons investing in climate finance want to ultimately understand how will these funds be used to advance climate resilience. They want to know that having put this in place, your steady state or your current state is going to be changed in a manner that allows you to either have adapted to climate change or have mitigated climate change. Here we come back to these two words, climate adaptation and mitigation. So your project pipeline helps you to attract the financing that you require, and of course, allows you to create the budgetary allocations for co-financing. The Climate Resilience Fund is the last I will speak of, and then I'll turn it over to Rafael. Now, the Climate Resilience Fund is being set up currently by the United Nations Economic Commission for Latin America and the Caribbean. And Antigua has been working along with this fund because we see this as a regional activity. So we've started off with our national fund, the SURF, and this now will be a regional activity that would allow other countries to be able to tap into other sources to help them build their climate resilience. This fund is going to be set up to counter some of our regional challenges: environmental vulnerability, relatively low economic growth that we spoke about earlier, helping us to fulfill our sustainable development goal gaps. That's what SDG stands for. Looking at issues of our high debt, and of course, dealing with our limited access to financing. And of course, it's an opportunity for us to present a whole structural transformation of how Caribbean economies function, because we don't want to always be just waiting until a storm hits to react. We want to be proactive, we want to prepare, we want to plan, and we want to be ready. Now, this fund has two pillars, two main pillars. In the first pillar, moving on with my slides, the first window, we have adaptation and mitigation priorities that I would have spoken about earlier: adaptation, energy security, pooled and scaled up insurance, water security and management, agriculture and food security, and of course, building a nexus with tourism, which a lot of us do. And window two, which will be looking at our area of work, which is debt restructuring and liquidity enhancement, looking at green bonds arranged by people like Credit Suisse, looking at new debt issues with development financing insurance, parametric insurance in the events of disaster. And of course, this second window also will aim for countries to be able to create about 50% more in terms of fiscal space than it has that could be directed towards climate resilience activities. So that's it for me. I'm going to turn you over now to Rafael, who will talk about debt for climate swaps.
Thank you, Nadia. And I think just going on with the theme about adaptability, which is such an important sort of concept. So you can see that Nadia is a debt expert, but over the last couple of years, she has to adapt herself and become an expert and also in climate finance in order to be able to address these issues. What you see here in this window, which is what I wanted to show you here, is these two windows shows the needs of Antigua. And so this is supposed to be a very encompassing sort of strategy to provide for many different options. But again, what we're trying to achieve here is open that fiscal space in order to be able to finance projects in many different ways. And what they have done, and this is where Antigua has always been a trailblazer, because Antigua at one point or another was one of the islands that most heavily impacted by the 2010 financial crisis. At that particular point in time, when Nadia was actually debt manager taking over those responsibilities, you remember, Nadia, that your debt to GDP ratio was above 112% of GDP, and your debt was around 56% to arrears. Now, despite the fact that the islands, we're talking about vulnerabilities, Antigua has been, I believe that it's one of the most vulnerable islands in terms of the SIDS, but it has had many different shocks, both financial as well as climate, that has had massive impact on everything that they do. But nonetheless, if we actually go back 12 years, we see that today, Antigua's debt to GDP ratio has come down despite all these shocks, and their arrears are still only about 12% of GDP, 12% of the debt stock, and it's actually only owed to bilateral creditors. Now, they also have a strategy for dealing with that situation, but that means that Antigua's situation also has to deal with what we call the window 2, which is why we have this idea of debt restructuring and liquidity enhancement. Now, for some islands and some other countries, that might not be relevant, but you can take some of the concepts here so in order to be able to build something for you, because everybody has debts. So the question is, how do you engage with those stakeholders, creditors, or investors, so you can actually do something in that perspective? So from this window, there are two major things that we were pursuing. One, as Nadia mentioned, and just very briefly, I'll discuss it, which is a liability management operation. The idea behind it is very simple. There are investors who are very keen on putting some of their funds, some of their money, in order to be able to contribute to climate adaptation and climate mitigation. So the idea behind it is to borrow money from these funds, from these green funds, and that's what we call either a blue bond or a green bond. And the name of those bonds differ on what you're trying to do. Usually blue bonds are looking into conservation, the marine ecosystem, that's what they're called, blue. Green is a much more wider situation, in which basically we can actually put together something in terms of climate mitigation more widely in climate adaptation. And the idea behind these bonds is that the investor will actually lend you the money with the expectation that there's going to be projects being built or being sort of financed through these funds, and you will have to report on that and give them enough accountability of what you're trying to achieve. So the idea behind it with this particular operation is to actually borrow the money through some of these funds through a green or through a blue bond. Then we actually buy back much more expensive debt, let's say in terms of interest rate or even maturities, and we use the savings, what we call net present value savings, the savings that generates, and we actually then instead of actually saving that money, we actually channeling it back to implementation of the projects, which is why Nadia was saying that before we can actually do any of these things, we had to have the right framework and have all the projects in place. Now, the second element that we're trying to pursue, and this is something that most countries have some experience with, is the issue of debt for climate swaps, which is basically a concept that it derives from debt conversion schemes. This is something that actually was developed back in the mid to late 80s by bilateral creditors after the Latin American debt crisis. The idea behind it is that when a country has to go out and restructure its debt, you have to have these agreements in order to be able to provide either for lower interest payments or for extended sort of maturity, so you can actually have more time to rebuild your fiscal buffers and then repay the debt later on. As a reward for countries who are doing very well, keeping up with their programs, with their commitments, some of these bilateral creditors, mostly in the form of Paris Club creditors, would allow some of that debt that was rescheduled to be able to be converted into some sort of a project, in which basically instead of paying them back, you would actually then basically take the debt and use those funds, that portion of the debt, either in terms of maturity, principal, or interest, and then channel it back to a project that was agreed and is being implemented through the help of that money. So that's the idea behind this, what we're trying to do. And we have adapted that sort of concept and go down to these bilateral creditors and other creditors. So you can actually do it with commercial creditors. And the difference between them is a bilateral creditor is usually a loan from a government to a government. And a commercial creditor is basically someone from the private sector, either a bank, another institution, an insurance company who actually lent to a particular debtor. Multilateral institutions like the World Bank or the IDB or the Caribbean Development Bank in the case of the Caribbean usually cannot participate in the conversion scheme because they'll impact their balance sheets and their capital ratios because it involves an element of debt forgiveness. And that's why they can't really do it. But we're working with them to see we can actually develop other strategies and other products that can be used. So in the case of Antigua, what you can see, I know this is very convoluted, but it's just starting to see where it comes from. The first thing is that we have the government of Antigua and Barbuda in the middle of it. They're the ones who hold the debt. Nadia spoke about the institutional arrangements, and that's where all of this here. This is where CIRF will sit. We call that a climate management trust. What we're trying to do is to get Antigua to meet with bilateral creditors, in this particular case, all commercial creditors, and try to see how they will be able to support the implementation of the programs that are in the pipeline. Nadia, I don't know if you want to speak a little bit about the projects, but about $156 million in projects have already been approved, have been already established, and already developed and are ready to be implemented. What we need is the cash to do so. That's very important. It's about how many? About 15, about 20. I remember, Nadia, we didn't put it in the presentation, but it's about 26 projects that you have already in mind, ready to go.
Yeah, just about 26 projects, all of them dealing with climate adaptation and mitigation.
So we present these projects and we try to convince them to support it. How they're going to support it, not with new money, but to allow us to take some of the debt that they actually have, that Antigua owes to them, allow them basically to rebuy that debt. So, and then use that money to implement these projects. And then what Antigua is trying to do is then to take some of that funding and then going to investors and say, can you match us, investors or donors? Antigua cannot buy back the debt on its own. So we try to bring in an implementation agent. You've seen that in the Caribbean, some countries have done something very similar in this model, but on a one-to-one basis. Like in the case of Belize, when they actually did a buyback of the super bond back in 2019, and that was actually then financed through a green bond. And now just the government of Barbados have done a very similar thing through a green bond and using resources from the IDB. They've actually started to buy back some of their commercial debt. That commercial debt was actually trading at around 90 cents on the dollar. So they did a solicitation to buy back some of the debt from the creditors, and that's how they did it. Now, Antigua wants to do something more comprehensive in the sense that we want to institutionalize the process, and that's what we're working with. So, and then you can see that at the end of the day, the climate fund will receive all the funds that will come, either from donors, from investors, from the creditors, from the debt swap. Some of that money will be put into an endowment. The idea of an endowment is to create annuity payments in perpetuity, and some of those other funds will then be able to use to provide either grants or, like Nadia specified, concessional loans to allow these projects to take place. So now that we set up the stage, let's talk a little bit about what's going on here. So what we done, I know this presentation is quite long, and we did it that way in order to provide you with some sort of documentation that you can use as a training tool. So you can revert back to it in case that you wanted to consider something for your own countries or your own debt management offices. So just very quickly, I'm going to just spend a little bit of time on debt conversion schemes and what they are. It's important to know that debt swaps are done on a voluntary basis. A creditor, no creditor, whether it's bilateral or commercial, is under any obligation to be able to provide a debt swap to anyone. And this is where having the right policy framework, the projects, and the institutional framework to be able to go ahead and provide accountability, transparency, and reporting mechanisms are very important, because you have to go out to the creditor and convince them that this project is important for them. So there have to be some strong financial, political, or other social reasons to allow the debtor to include and to participate in a debt swap. In the case of Antigua, now we already know that Antigua has a lot of vulnerabilities on the debt side. The debt is not considered sustainable, but we're not approaching it from the perspective of the sustainability, although that is a byproduct of what we're trying to achieve. Our main focus is to look at the fiscal constraints and how we can go ahead and start to create that fiscal space. And that's the argument that we're using with the creditors. You're helping us do two things. One is to allow the island to be able to go ahead and implement these projects. We need the fiscal space, and it's only one aspect of it. And at the same time, we're allowing us a way to be able to normalize our arrears and to lower our vulnerabilities on the debt side. But that is not what we're trying to achieve here. Okay. I'm sorry, because I'm actually moving the thing. So the 7 steps that we have actually that Antigua, that Nadia has actually put together in order to be able to pursue and to engage with creditors, to be able to actually implement the whole process of a debt swap. And we're not doing it only with bilateral, but with all the creditor base that we actually have, except the multilaterals. We actually, and I will, just a parenthesis here, we're not talking and we're not engaging with domestic creditors because of the systemic risk that they actually have. We don't want in any way to impact our balance sheets, whether it's a local bank or local institution based in Antigua or in the region of the Caribbean. So we are not talking to them, not because they don't want to, but because we don't want to have any implications on the financial side. So the 7 steps, the first thing that we actually needed to do is to do a very comprehensive analysis of Antigua and Barbuda's public sector debt. The key point here is we need to identify which are the claims that are eligible, right, to be able to engage in a debt swap. From that perspective, we try to assess what is the maximum of the potential quantum of debt that we can actually then try to negotiate for a debt swap. And then we want to target within those liabilities which are the most favorable in terms of being able to implement that swap. The ones that have higher interest rates, shorter maturities, and not an embedded risk. It could be, for example, the exchange rate, or it can be if it's a floating exchange rate, or it can be whatever it is. We're not trying to cherry pick here. Remember, what we're trying to achieve here is maximize the savings. So therefore, we're actually trying to find the most expensive loans. But once we do that, and then we actually value the claim, because remember, our claim has a value, it's an intrinsic value. We call that the net present value of that claim. Then we can take the lower the net present value for Antigua, or the higher the discount we can get from that debt, the more the savings we get. The second step is basically to identify who are those creditors who may be willing to, who owns the debt, and then engage with them to see if they'd be willing to participate. Now, in some of the situations, some bilateral creditors actually have programs to be instituted on the debt swaps. So we want to be able to leverage that experience. So I'll give you an example. The governments of Spain, the governments of Germany, the UK, and the governments of France, they actually have all these institutional frameworks for doing debt swaps. So we've also engaged with them. Then there are other bilateral creditors that we're actually engaging with, which are not part of the Paris Club, like the government of Brazil, the government of China, the government of Venezuela, who are actually creditors to Antigua. We're trying to engage with them as well. Now, these countries are not very experienced in debt swaps, so we have to go into a little bit deeper to be able to explain what we're trying to achieve. And that's where the third aspect becomes very important, because we have to define not only what are the goals of what we're trying to achieve here, but in what way Antigua will commit to ensure that the implementation of the projects through the financing we're receiving from these creditors will be taken care of, and there will be no siphoning, corruption, or anything like that. It's important from that perspective. From that perspective, then we move on to the fourth part, which basically is the presentation of the projects that we actually have in order to be able to show them exactly the concrete projects to be implemented that will be financed through these processes, and then we'll have tangible benefits for Antigua. We're actually going to achieve our commitments, which is climate mitigation and climate adaptation. Then, as part of this process, we had to sit down and formulate a communication and engagement strategy. This is important because we're not only talking to creditors, but we're talking to other stakeholders who are going to support us in the process, whether it's NGOs, other governments, multilateral organizations like the World Bank, the CDB, the Central Bank, the CCB, for example. All these stakeholders need to come together to work together, because no one really, climate mitigation and adaptation is not in a vacuum. We have to work together. For the Caribbean region, it's very important to do that. So building that communication and engagement strategy is important to be able to build the consensus and find a way to work together. Nadia already talked about the sixth aspect of it. It was just we're really well ahead, because for the last 7-8 years, Nadia has been working with the government, with the different departments within Antigua to create this legal framework and compliance framework. And that's how we're going to actually support how we're going to monitor, how we're going to account for, and how we're going to report what takes place in the debt conversion scheme. And then the final part, the most difficult one, is closing the transaction. The transaction means how we're going to document it, what are the commitments that we will have, Antigua will have, and what are the commitments that the creditor will have, and other stakeholders will also have a role, what they will play, and also includes how you're going to purchase the debt, what would Antigua do in order to be able to repay it back under the new framework, because that's the whole idea, right? So the debt doesn't disappear. It's just we're changing the cash flows. The cash flows, instead of going to the creditor, will then go to a project. In this particular case, it will go to SURF or something like SURF in order to implement the projects. I'm going to skip through this slide just because I already discussed a lot of it in this particular point of view, and for in the interest of time, because we really wanted to open up for Q&As from you, so in order to be able to get any make sure we actually cover all your questions. Now, again, this is the point that I was trying to make here. The strategy, even though it's comprehensive, has a lot of cost, and it's time demanding. It's not so very easy to do, but we feel we're trying to build sort of incrementally. For a lot of countries, for a lot of debt managers, doing a debt swap sometimes can become very costly because it takes a long time. Not all creditors are prepared to consider debt swaps. It involves a cancellation. Not all multilateral creditors participate. There's a lot of cost involved. But if we actually have a systemic project in place, then we can start to build on it. And what we're trying to achieve is to create cash flows over time from different sources so that we're able to get to where we want to go to. So I encourage you to think about this in your own different countries, because it's something that we can actually then, the more we think about it as a group, the more we present that as with one voice and one entire sort of project base, we can probably be able to build more support from the creditor's side. Creditors at this point in time
understand that these things are
be done, but they just don't want to. I mean, if there's no pressure from the social side, the political side, it becomes more difficult, and we have to build on that as well. Now we're going to move to some conclusions. This is where Nadia and I will talk about it together. The first thing that I'll say, and I'm just making this point again, debt swaps alone will not have a material impact on long-term sustainability. That's not in Antigua, not in anybody else's country, whether your debt is sustainable or not. We're not trying to forgive the debt. We're just trying to change the profile of the debt and how we're going to be using it. And this is what we're trying to achieve. I don't know, Nadia, you wanted to complement anything else in these conclusions, but that's the main conclusion of the program at this point in time. We wanted to impart on you. We're not trying to address the sustainability of the long term, but address vulnerabilities on the fiscal side.
Yeah, I just wanted to add, Rafael, that the fiscal space is going to grow over time. So in your first year of doing your program, you may not have a huge amount of fiscal space generated, but the idea is to see the long-term effect and creating this space over time, so that if you start today with $10, you gradually build. So for example, the SURF, you start with grants, and then the idea is you have reflows coming in from the persons paying back their loans. And so you're building a cadre of funds over time. And of course, building credibility over time as well, because when you start off first, trying to sell your projects, trying to sell your debt for climate swaps, trying to sell a green bond or blue bond or whatever it is, it's going to require a lot of effort, like Rafael spoke about, a lot of money hitting the ground. But once you would have done it and you've built the credibility, then it creates a platform to be able to continue to do it over time.
And that's important. And remember, Antigua is doing this on his own. It's a standalone. But imagine if we're able to get the Eastern Caribbean speaking with one voice. I think it'll be much more easier to make a case and try to convince creditors, bilateral creditors and commercial creditors, to consider this seriously. Remember, and we're trying to build different sort of programs and projects and instruments in order to be able to build fiscal space over time. So that's one thing that we wanted to leave behind, which is why we wanted to thank Lee for this presentation, this opportunity, because it gives an opportunity to build awareness and see if what your thoughts will be on that aspect of it. I think what we're trying to do here, and this is the whole point that I was trying to explain, the magnitude and scope of the environmental challenges means that people cannot, no country, no debtor can work alone. And not one aspect, not one strategy will work. We have to create a combination of strategies. This is what we spoke about two different things here. We talked about liability management operations funded through green or blue bonds. We talk about debt conversion schemes. There's a lot of other things that we're considering, and that needs to be put together into a national strategy, which is what Antigua has done. And what we're doing now, what we want to do now, the next step for Antigua, for Nadia, is to just now build consensus, not only on the regional side, but also globally as well. And that's where on COP, that really, now in Sharm el-Sheikh here in Egypt, we're discussing these issues, and at the IMF, at the World Bank, at the CDB, at all different types of levels, we're trying to build that consensus in order to be able to coordinate and facilitate regional and global cooperation. It really is the only way that it will work. And capacity building is an important aspect of it. We also have to speak with one voice, but we have to understand what we're trying to do. If we don't speak with one voice, then it becomes very difficult in order to be able to implement different aspects of where we want to get to. Nadia?
And of course, we need capacity building. All of us are not climate experts. All of us are not finance experts. All of us are not climate finance experts, but we can build capacity over time. And we need to continue to do this across institutions so that we can get this whole of government approach that I've referred to, because the Ministry of Finance can't do it alone. The Ministry of Legal Affairs and the Department of Environment, it could take up the entire government. It won't be able to do it on its own. It requires a whole of government approach. We all need to see climate resilience as something that each one of us has to participate in and to support efforts where we can.
Thank you, Nadia. And then I think just to thank everyone for making the time to participate. We really would like to take all your questions. If we cannot answer your questions today, we will promise you that we will get back to you with some thoughts, and we'd like to continue with the dialogue going forward. Nadia, I want to thank you for the invitation. I also want to take a moment to thank Louis for the opportunity. And also, Louis, if you are available to work for public resources and public relations, I'd like to hire you to be my public relations expert.
Yeah, my boss is on this webinar, so you will not be very pleased with that.
No, thank you for the introduction. I appreciate it.
No problem.
Pass it on to Nadia for Nadia's
collaborate. There's a question in the chat, so I'm going to go right to that question. Faye from Barbuda is asking, is debt for climate swap the same as debt for nature swap?
Well, that's a really good question. So because of interest of time, we didn't actually put together a very comprehensive presentation on what debt conversion scheme is. So debt conversion schemes, that's what they're really actually known for. The whole concept of debt conversion scheme is basically buying back your debt and then rechanneling those resources for projects, agreed upon projects. So there are many different offshoots of debt conversion scheme. One of them is called debt for development, which is basically was the original aspect of a debt conversion scheme. Then there is also debt for nature. Debt for climate is more specific. Debt for nature had to do with more conservation of a particular resource, whether it's a forest or something, or the marine ecosystem. So like, for example, the United States of America actually has a whole tropical conservation project in which a debtor can actually go apply for that. Chile, Peru, they did it as well. So what we've done is debt for nature has now been transformed into debt for climate, but it's all an offshoot of debt conversion schemes. I hope that answers your questions.
All right, thank you. And so folks, we do have a little bit of time to take a few more questions. I have a question in the meantime, and this one is for Nadia. Wait, no, I will go to Emily. Emily has her hand up. Hold on there. Emily, you should be able to unmute. Go right ahead and pose your question.
Thank you very much. And I didn't mean to disturb you from what you were going to say, but I want to commend the CARICAD as well as the presenters for a very, very comprehensive presentation. And even though you might think you went fast or whatever, you gave a lot, it was very comprehensive, very proper. I want to just say a few things. In 1995, I went to Dundee to do a PhD in social and environmental accounting, and it seemed kind of far out and weird back then, but it certainly wasn't. To me, it was the future. And I work at UE. One of the concerns that I've had, and it continues, is that we need to embed this, which is the reality going forward, embed it in our degree programs. Our accounting students are still learning the same old, our finance students are still learning the same old stuff. And this is, in fact, critical for the capacity building that we speak about. And capacity building shouldn't just be for certain people in the public sector. It really has to be the entire region in terms of how we educate people, even at the primary level and so on. So we have a number of projects that we are doing I'm with the Open Campus now. I used to be at K-Phil as an accounting lecturer, but we have a number of projects, and my colleague Andrea Burnett is on as well. We are just completing a MOOC on a massive open online course on just transition from a small island developing state perspective. And we want to really push for reforming our education for the management students, accounting students, and so on. And what you have presented here is really showing us that we have proper, solid case studies in the Caribbean that can form a part of that education transformation that is way overdue. And I think I want to really applaud Antigua. One of the reasons I came is because I saw Antigua being listed as the people coming to speak, and you all have been my heroes with respect to the Green Climate Fund. And that's another area that we need to really be pressing. So I really like this. And so I don't have a question, but I have a call for action to have governments encourage us in the UE, in all our educational institutions at all levels, to really embed and change, make that curriculum transformation that is needed to really feed into what is the future for managing, leading, financing, and so on. And thank you for explaining debt for these swaps, because I understand swaps, but this now gives me the deeper understanding of exactly what transpires, because I saw what Barbados was doing, but of course you would not have gotten a deep explanation of it. And I really appreciate the explanation. So thank you very much. So I'll stop there. Thank you.
No, thank you, Emily. I mean, I think you're really on point in terms of some of the things that we have to do for ourselves in terms of building capacity, really from the primary educational level all the way up. Thank you for that comment. Nadia, the question that I had was something along the line of what Emily just talked about. And for you as a public sector manager, leader, and yes, you would have had this traditional education, you wouldn't have had all of this, climate financing in your background. What was that journey like to actually upscale and build your own capacity around this? Not that you have arrived. I know you would say I haven't arrived, but you've certainly been on that journey. What is it like to do that kind of personal pivot as a leader, to embrace new knowledge, to deal with these new challenges?
That's an excellent question, Loy. And for me, it came from awareness. So first, I learned about it. And I thought that this was something that I could do to make my job a little easier if people want to borrow less. First of all, that was my first inclination. If people borrow less, then I have less to worry about. It was very selfish on my part initially. But gradually, I started working very closely with the Department of Environment, to the chagrin of my co-workers here, actually. And they were like, you're always over at the Department of Environment. But they always wanted somebody to listen. And so there I was, the listening ear. And over time, I realized I was building this body of knowledge that, I didn't even intentionally set out to learn. I was being totally selfish, but I was gaining this body of knowledge. And it grew so much so that I actually represent SIDS now at the Green Climate Fund. So I not only represent Caribbean SIDS, I represent Pacific SIDS and Asian Indian Ocean SIDS as well. So my body of knowledge was really expanded. I've had to learn about the challenge of different small island states and what we're all doing to combat climate change. For me, it took a lot of willpower to keep it going. Like I said, I wasn't always supported by my bosses, but I've always had the thought that we don't work in silos well, and we need to adopt what I call that whole of government approach. So if you know what somebody else is doing, you understand why your job itself becomes a bottleneck. You understand why borrowing becomes necessary when a storm hits, when it's the worst possible time to borrow. And you realize that preparation has to be made to prevent you from having to beg a creditor, please give us money, because so-and-so won't be able to cross that bridge and that whole community is now separated from town. I mean, you don't want to have these conversations. And if you prepare, then you don't have to be there. So it really took a lot of willpower. I learned a lot about adaptive leadership during CLP. So I had to pull from my toolbox there, having a lot of emotional intelligence to understand that even though people don't see why you're doing it, to push forward and do it nonetheless, and not to be angry because they think you may be wasting time, but to understand that this is you trying to make best use of your time to give yourself another skill that you're going to need later. And so much so that I need it now. So it was a lot in terms of my learning journey. And as you said, it's not ending. I'm still doing this doctoral program and learning every day. So it's really about adaptive leadership. And it's something we all have to try to pull into our toolbox, because if we don't adapt, we will not survive.
No, indeed. Thank you. Rafael, my next question is to you. And pulling on your experience across different continents, different countries, and if a country they might feel they're behind, probably they're not as advanced as others in really embracing and, climate financing and making those changes, whether it's in the institutional arrangements, whether it's in legislation, etc. Where should such a country, such a public service start?
Actually, I think the best person to answer that question is someone like Nadia, because that's just where we started. But no, you make a really good point. I mean, the point is that we are at very different stages, and we all have to contribute one way or another. There's a lot of debate going on. I mean, there've been already 27 different United Nations conventions on climate. This is 27 now taking place. And this is one place where there's a real first forum for countries to understand, what is available. But in addition to do that, it's understanding what your climate vulnerabilities are, in order to be able to assess what they are, be frank about them. In the case of Antigua, the three major issues that we need to address in the case of Antigua is droughts, rising sea levels, and the impact of extreme weather-related events in the case of hurricanes. So Antigua has defined what their vulnerabilities are. Now we're building over time how you're going to be able to address them. But one thing is clear: Antigua cannot do anything on rising sea levels, cannot do anything on droughts, it cannot do anything to change hurricanes, but it can start working to be able to address how they will be able to adapt to that and mitigate that over time. Working together with others, we can actually build much more options in order to be able to address it. So I think you're right. And we worked with some other countries in the past. We did. One of my colleagues is actually here as well. Together, we worked with the World Bank to develop an environmental strategy for the government of Armenia up in Asia, a country who is actually landlocked, and one of the countries who are facing a lot of different changes to climate vulnerabilities. So there's a lot of countries who are doing this thing. But this is not going to be overnight. I mean, Nadia, we started this work, you and I, in 2010. We're 2022. So 12 years of basically learning, adapting. I think Nadia, you've been way too modest in how you've grown, because she's taking on responsibilities, and that were not really part of her mandate or her remit as a debt manager, but there was no one else because there's lack of resources and capacity in small islands. Somebody has to step up and take responsibility, and you train yourself, you learn, you put yourself out there. I got out there, speak with donors and different people, continue to train yourself. There's a lot of opportunities to the World Bank, the IMF, the CDB, the IDB, for capacity building, for training, for technical assistance. We have to use everything that is at our fingertips in order to build this resilience. But Nadia, I think you should also speak more about that, given your experience and your journey, not only for Antigua, but also yourself.
Yeah, so just to couple with what you're saying, Rafael. So a lot of countries that I've had the privilege of working with since I'm in the SIDS atmosphere is to learn, start at the national plan level. So with us, we started looking at our budget first. It's the simplest thing. We do it every year. Everybody has to contribute. Everybody has to do budget submission, and they have to do budget reporting. We started looking at our budget. Where is your money going? And once we realized that only 3% was being spent on this every year, we realized you spend 3% every year and then a storm hits and suddenly you need 50% of your budget. So you need to really amp up over time so that that 50% doesn't hit you at one time and you don't have it. So we started looking at our budget first, and then we branched out. We start look at fiscal strategy, look in medium term. So you start annual, then you look more medium term, then you start to look more long term. What is going to be required over time? And then you look at your capacity constraints. Who do you have? Just like Rafael said, who is existing in the public sector that we can use to champion these causes? In our case, we have an ambassador of climate change, and all she does is go all over the world talking about climate change everywhere. And she meets with different donors and they come through. And then, over time, we decided, Antigua and Barbuda, that we will become an accredited agency. So we became accredited to the Green Climate Fund, the GEF, and to the Adaptation Fund. And because we're accredited, with that comes further capacity building, because these agencies then provide you with capacity building. And the Ministry of Finance, because we always want to know where the money is going, we got engaged. There's money coming here. Why is it coming here? And once we started to ask those questions, we became what's called a co-NDA. So we are what we call a co-national designated authority for the Green Climate Fund, such that any capacity building that's given to the Department of Environment also is shared with the Ministry of Finance, so that we learn whatever they're learning and we're able to understand where the money is going, why it's important, who is lacking, who should get more. So it really starts by engaging on that national budget first. That's what Faye was talking about, that they're going to be monitoring. It starts there, because once you start to see where the money is going, just as with your personal budget, you just adjust your life to suit.
All right. And really, we are actually out of time. We want to just say a big, big thank you to Nadia and Rafael for just such an educational, insightful presentation and for taking our questions. And I'm going to ask our virtual producer just to put our email address in the chat. It's info@caricad.net, because I recognize a couple more persons might have questions. And if you email them to us, we will put you in, and we will link you with Nadia and Rafael to have those follow-up questions addressed. We've also put in the chat the link to our survey for our webinar. We always like to get feedback. We always want to improve. So we're going to ask you to do that. And so while we exit, I just want to share a couple of announcements with you. Our call for applications, that is now open for our Leading Change workshop. And for 2023, we recognize two things. One, because of our post-pandemic recovery process that, we just talked about climate financing, that our stakeholders financing is, they're more challenged in that area. But we also recognize the need for capacity building, because as you've heard from Nadia, all of these things require leadership. If we're going to implement successfully, we're going to really learn. It requires leadership at the individual level and at the systemic level. And so we want to ensure that we increase the opportunity and access for our stakeholders to access these leadership development opportunities. And so our Leading Change workshop, that happens in January 2023 across 4 weeks, 4 days. And the cost for that has been reduced. It is now US $1,000 per participant. And then a little later on, you will see the call for application out for our Transformational Leadership Development Program. It's a 6-month program that will run next year from February through to early July 2023. And that cost has been reduced from $6,000 to $3,500 US. And that program would include not only the learning sessions, but also you've assigned an individual executive coach, and you'll also be involved in action learning as a leadership development tool. So, please visit our website, caricad.net. You see our email address there. You can email us. if you want more information on these and other offerings. All right. So thank you all so very much. Please do complete our survey. And thanks once again for joining us for this webinar. Look out for other webinar opportunities. We'll share those by email, by our website, and by our social media pages. Thanks you all very much.
Thank you very much.